Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 5th of July, taking us into the third quarter. And the first half of the year actually turned out to be a pretty positive one. There are inflation concerns in the background, of course. We're seeing an increasing theme of staff and general worker shortages. We've also had disruption to some supply chains because of the absence of raw materials. Nonetheless, the central banks in both the US and the UK are maintaining that we expect a further spike in inflation, but that it will be temporary. That obviously takes some of the worries away from either of the central banks needing to taper their current monetary support or indeed raise interest rates. So in the background, we've had this incredible amount of stimulus in the US. Quite apart from the loose monetary policy, you've had the multi-trillion-dollar stimulus packages. In the UK, we've also got this absolute pillar of support to drive any economic recovery. So all things considered, it has indeed been a positive half year. And with that monetary policy assistance in mind, the market is currently set fair. There's also, of course, the imminent second quarter reporting season coming up, for which there are high hopes indeed. So in the year to date, we've got the Dow Jones currently up 13%, the S&P 500 up 15%. That's after hitting a record closing high for the sixth consecutive trading session. The Nasdaq is up 12.7% and the FTSE 100 up 10.6%. Turning to next week, we've got a first quarter update from Sainsbury. It's had a fairly good year. Shares are up 34% over the last 12 months. One of the things to look out for is that it's been switching towards, not surprisingly, during the pandemic, online food sales, and the growth there has been quite impressive. So we would expect to see how much of that switch has continued now that some of the restrictions are beginning to be eased. There's also been a very strong performance from its Argos subsidiary. So again, let's see how the pandemic has played out there. Particularly computing and electrical goods have made their contribution. And overall, whether Sainsbury's continuing to simplify its operations, as many companies have, brought about by the coronavirus restrictions. On a similar theme, we've got half-year numbers from Ocado. Last time we heard from them, they were just telling us about their retail side. So again, expect an update on how the joint venture with Marks and Spencer is progressing. They're going to start to come up against some tough comparatives as we lapped last year. Of course, the main driver of potential further growth is this incredible robotics warehouses that Ocado possesses in its solutions business. It's had a number of transformational international deals, and any update there would be very welcome for long-standing supporters of the stock. The shares are actually down 2% over the last year, but if you go back 3 years, they're up 94%. The travel of direction has been fairly clear. And finally, a trading statement from Persimmon. Obviously, there's a lot of tailwinds for the house building sector at the moment: mortgage availability, low interest rates, stamp duty holiday, and so on. So the kind of things to look out for Persimmon, whose shares are up 33% over the last year, will be what sort of demand they're seeing, what their sales rates are, indeed what their forward order book looks like, as well as average selling prices on the homes in the current environment. They've also got a very strong net cash position, which has enabled the payment of a fairly punchy dividend. Thank you for watching. Have a great week.